Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of financial reports to uncover hidden gems and expose the not-so-glamorous truth. Today we're diving deep into a report that shows us exactly where a bond fund is putting its money and how it's performing. This report is from the Sterling Capital Enhanced Core Bond ETF, and it gives us a look at their investments and financial health as of June 30, 2025. Think of it like a peek under the hood of this investment vehicle, showing us what's driving its value and if it's delivering for its investors. Right off the bat, we see some key figures. The fund has grown significantly with net assets of over $41.17 million. That's a lot of money invested. It holds 222 different investments, which suggests a strategy of diversification, spreading its bets across many assets to manage risk. The advisory fee, which is what the fund manager Sterling Capital charges for their expertise, is around 43,000. How often the fund buys and sells its investments. A 35% turnover isn't extremely high, suggesting a strategy that isn't overly aggressive in trading, which can be good for managing costs. Rare farm. Now let's talk about where the money is actually going. The fund has a significant chunk, about 23.7% in asset-backed securities. These are financial products tied to a pool of assets like loans or leases. Then we see corporate bonds making up 23.2% of the portfolio. These are loans made to companies to help them grow or operate. A large portion, 28.6%, is in US government and agencies. These are generally considered safer investments, often backed by the government. Finally, about 24.5% is in US Treasury bonds and notes. These are direct debt instruments from the US government and agencies. These are generally considered safer investments, often backed by the government. Finally, about 24.5% is in US Treasury bonds and notes. These are direct debt instruments from the US government and are considered very safe. This mix shows a balanced approach, leaning heavily towards government-backed securities for stability, with a good portion in corporate bonds for income. Looking at the actual investments, it's a long list of specific bonds. For example, in the asset-backed securities section, we see holdings like Avis Budget Rental Car Funding ARFOP LLC Series 3A4 with a coupon of 5.23%. We also find Enterprise Fleet Financing $2,000 and a coupon rate of 5.23%. We also find Enterprise Fleet Financing 2020 Limited Series 3A on R23A, where the rate is tied to a benchmark plus a spread. This variety highlights the complexity within the bond market. Moving into corporate bonds, the strategy becomes clearer. We see major companies here. There's Boeing Company with various maturities and coupon rates like 6.298% and a 5% or 0.5%. Then there's Ford Motor Company with a 6.0% coupon. In the banking sector, we see investments in big names like Bank of America Corporation with rates tied to benchmarks like SOFR rate plus a spread. It's interesting to see how they're invested across different industries, from aerospace and defense to automotive and banking, each with its own set of financial characteristics and risks. The US government and agencies section shows a large portfolio of Fannie Mae and Freddie Mac securities. For instance, there are many Fannie Mae pools like FA0642 with a 200000000% coupon. Similarly, Freddie Mac pools like SD6920 with a 4.00000% coupon. And SL0704 with a 4.055% coupon are listed. These government-backed securities are a cornerstone of the fund's stability. And finally, the US Treasury bonds and notes section shows direct holdings of US government debt. We see United States Treasury bonds with coupon rates like 2.625%, 4.000% maturing at different dates through 2054. The total for these investments alone is over $100 million, underscoring their focus on US Treasury debt. Let's look at the fund's overall financial position. Total assets are over $421 million. Investments themselves are valued at over $410 million. They have cash of nearly $6 million, which is important for operational needs and to meet any immediate obligations. Liabilities are around $3.7 million, mainly for investments purchased and accrued expenses. This leaves the net assets at over $41.17 million, mainly for investment purchased and accrued expenses. This leaves the net assets at over $407 million, mainly for investments purchased and accrued expenses. This leaves the net assets at over $471 million, mainly for investments purchased and accrued expenses. This leaves the net assets at over $417 million. The net asset value per share is about $25.21. This statement tells us how the fund performed financially during the period from March 13, 2025. They earned over $4.3 million in interest income, which is the bread and butter of a bond fund. After deducting expenses, mainly the advisory fee of around $343,000, the net investment income was about $3.9 million. It means the overview of their investments went up overall. Combined, the fund saw a net increase in net assets of over $6.1 million. That means the value of their investments went up overall. Combined, the fund saw a net increase in net assets of over $6 million and interest income was about $3.9 million. But that's not the whole story. The fund also experienced net realized and unrealized gains of over $2.9 million. But that's not the whole story. The fund also experienced net realized and unrealized gains of over $2.1 million. But that's not the whole story. The fund also experienced net realized and unrealized gains of over $2.1 million. For a single share, the performance looks pretty good for the period. Starting at $25 then it grew to $25.20. It grew to $25. It grew of dollars 1.64%. This might not sound like a lot, but remember this is for a period of less than 6 months, and it's for a bond fund which typically aims for steadier, less volatile returns, Ks with the investors not eaten up by fees. But remember this is for a period of less than 6 months, and it's for a bond fund which typically aims for steadier, less volatile returns compared to stocks. The key takeaway here is that the fund is making money and growing its net asset value. The expenses are quite controlled, with the ratio of net expenses to average net assets at a low 0.39%. This means most of what the fund earns stays with the investors, not eaten up by fees. This fund is part of a larger structure called Capital Series Trust, established in Ohio. Sterling Capital Management LLC is the investment advisor, and their goal is to seek high current income and competitive total return. Essentially, they want to provide steady income and decent overall growth for investors. A key point here is how they handle estimates. Like most financial reports, this one relies on management's estimates about future events and values. These are educated guesses, and the actual results might differ. They are also structured as a regulated investment company, meaning they aim to distribute most of their taxable income to shareholders, which helps them avoid paying taxes as a company. This section talks about how they value their investments. Most of their holdings, we saw over $410 million worth, are classified as level 2 assets. This means their value is based on observable market data, like quotes for similar securities or interest rates. Crucially, they don't seem to have any level 3 assets, which are valued using unobservable inputs, suggesting a transparent and market-driven valuation process, which is a good sign for investors. The management fee is 0.39% annually, which is quite competitive, especially considering Sterling Capital is responsible for most of the fund's operating expenses. For the period, Sterling Capital earned over $343,000. They also use services from companies like Ultimus Fund Solutions for administration and Northern Lights distributors for selling the shares, all linked through affiliates. The trustees who oversee the fund receive modest retainers, de Ultimus Warnmeist retainers. For the period, they made significant purchases of investments totaling over $169 million and had sales of about $30 million. This indicates active management in adjusting the portfolio's holdings. It's important to note that you can't just buy one share at a time. You have to buy in large blocks called creation units. Typically 25,000 shares. This is common for exchange-traded funds or ETFs, and usually done through special intermediaries called authorized participants. They also mention transaction fees for creations and redemptions, but for this period the fund didn't receive any of these fees. This part is interesting. The fund has net unrealized appreciation of over $2.4 million. This is the difference between the current market value of their investments and what they originally paid for them, but only for tax purposes. It means if they were to sell these investments now, they would have a gain that's taxable. So what's my take on this report? The Sterling Capital Enhanced Core Bond ETF appears to be a well-managed fund with a solid investment strategy focused on stability and income, heavily weighted towards US government and agency debt, along with a significant allocation to corporate bonds. The low expense ratio and positive total return for the period are definite strengths, indicating that the fund is efficiently managed and is delivering performance for its investors. The valuation methodology, relying on observable market inputs, also instills confidence in the reporting accuracy. One notable aspect is that you can't directly buy individual shares. You need to go through an authorized participant, which is standard for ETFs but worth noting for individual investors. The overall direction seems positive, with a clear focus on providing reliable income and capital preservation. Alright, that's our breakdown of Sterling Capital Enhanced Core Bond ETF's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.